Welcome to Module 1. We're going to go through the actual basics. Before we start talking about strategies, setups, charts, entries, and all the different things that come with trading, we need to start with the foundation. And the foundation is understanding what is trading. Like, what does this all mean? Because before you can become a trader, you have to understand what the job actually is. A lot of people come into trading because maybe you've seen the screenshot of profits. You see people making money from their phones, you see the lifestyle. But what you don't see is that there's an actual process behind how those people got there. So trading is definitely something you want to understand. Trading is not gambling. Trading is not just clicking buttons. Trading is understanding how the market works and making decisions based on what price is showing you. So let's kind of break that down in the simplest way possible. What is a market? A market is simply a place where buyers and sellers meet. That's it. Think about going to a regular store. When you walk into a store, there's a buyer and there's a seller. There's a seller that has a product they want to sell, and then there's a buyer who has the money they want to exchange for that product. Trading markets work the same way. The only difference is instead of buying a physical product, you are actually buying and selling financial instruments. So you have things like stocks, currencies, indexes, commodities, crypto, and like other assets as well. So every single market you participate in has buyers and sellers competing against each other. And that's the competition that will create the movement in the market, right? And so why does price move? Price moves because buyers and sellers are constantly competing. So think of it like a tug of war. You have buyers on one side, you have sellers on one side. You have buyers trying to push price higher, then you have sellers trying to push price lower. And so when buyers are stronger, we're going to get a move up in the market. When sellers are stronger, we're going to get a strong move down. That's the simplest way to understand price movement, right? Every candle you see on the chart is going to represent this battle between buyers and sellers. I'm actually going to share my screen here so that we can go further into like the visual of this. Let's see here. All right. So every move you see here, every pullback, every breakout, every reversal is all showing you the battle that's happening between buyers and sellers. So something to know, a candle is kind of like a snapshot, right? It's going to show you that tug of war over time. So it's going to show you where this is where price started, and then it's going to show you where price is ending, right? And it's going to show you how far buyers or sellers are able to push the market up or sellers are able to push the market down, right? And so we'll go much deeper on reading candles later in this course, but for now, just know that every candle is like a mini record of who won that round. So if it's this reddish color, sellers obviously won. If it's this teal, greenish, blue color, that means buyers have won. And you can actually change the color of your candles as well. Now, let's talk about the two basic decisions a trader can make. The first is buying, which is also called going long. So when a trader says they're buying, right? This is that button. A trader saying, hey, I am going to buy because this is what I think price is going to do. Or if a person believes that, hey, I think actually price is going to sell, you would hit this sell button because that's what you believe. You believe price is going to sell. And so what happens is if you believe price is going to go higher and you enter a buy trade, if it moves, let's say you entered here, right? Let's say you enter here, but then price moves up to this point, right? Let's say you had these 2 points. You entered here at this blue line, but you believe price is going to go to this green point, right? Whatever the difference is between there, that's where you would gain your profit. Same difference. If you sold at a higher price here, but you believe price is going to come down to this blue line, you made the money from price decreasing. And so this is the difference of buying or selling, which is also called a short. So when you're selling, you believe price is going to decrease. Now, this can sometimes confuse because you probably are thinking like, how can I sell something I don't own, right? Or how can I buy something that I don't physically have? In trading, you're not necessarily selling a physical item. You are simply participating in the movement of price. So if you believe price is going to go down, you can enter a sell trade. If you believe price is going to go lower, then you're going to make a profit on there. So the difference between where you enter and where you exit is your potential profit. Now, here's a simple way to picture it. Imagine you like borrow a pair of sneakers and they cost $100, right? And you sell them right away. But then later on, You buy them back later for $80 to return them and you pocket the $20 difference. That's the same idea as selling first, right? So you sell and then you're buying back lower once price are going that, except you're not doing that with sneakers. You're doing that with the price. Now, entering and closing a trade. Like I say, you want to enter a trade. If you're buying, you would hit this green button. If you're going to sell, you would hit this red button here. The entry and the exit. The entry is when you open the position. And this is when you decide, I believe price is going to go in this direction. The exit is when you click this button here, you're saying, you know what, I'm closing this trade. I'm done. Maybe you reached your target, or maybe the trade didn't go your way. Maybe your plan told you it was time to exit. Your job is not just knowing when to enter, it's also knowing when, hey, it's time for you to exit. Which, let's talk about that profit and loss. Every time a trade has an outcome, you're either going to lose money or you're going to make money. Profit happens when price moves in your expected direction. Loss is going to happen when price moves against your expectation. So, for example, you enter a buy trade, right? Let's just do it because you think price will go up, right? But if price goes up, you have the opportunity to profit. But if it goes down, you're going to experience a loss. So for example, here, I bought at these two positions, but what's happening? Price is going below that. So I am at a red here. I'm losing. And so now that price is going down, I have to make a decision. This is why risk management is such a major part of trading, because even the best trader in the world do not win every single trade. So the goal isn't to be right every time. The goal is to manage your risk and make smart decisions. And the more you practice that, right? So I'm going to close because it's clear here price is going to go a different way. I'm going to close. It's very important that you practice risk management and also knowing at every trade what you're comfortable with losing. So if a trader risks a small, like you have a defined amount and you say, I've decided in advance, I'm comfortable with losing this much, then no single loss is going to wipe you out because you've already planned for this. You're not afraid of it. So it's not about avoiding the loss. It's about having your expectations before you even get in the market. So your job, right, is not to predict, because you can't predict in this market. Your job is to analyze the information, create a plan, manage your risk, and then execute when the opportunity makes sense. So you should be asking yourself, what is price doing when I look at this chart? What currently has control? Is buyers or sellers in control? Are buyers stronger or sellers stronger? And where are the important areas I need to look at? What's my risk? What is my potential reward? Does this fit my trading plan? Which we'll go deeper into what that looks like. And this is exactly why we're going to start here, right? Which, let me stop sharing my screen here. This is exactly why we're going to start here. So before you learn how to take the trades, I just want you to understand what is actually happening behind every trade, because charts are not just lines and candles. Chart represents decisions, right? It represents buyers and sellers fighting for some type of control. And once you understand that, the market starts to kind of make more sense. And so throughout this course, we're going to keep building on this foundation. We're going to learn how to set up your tools, understand price, analyze the market, create a plan. What does it mean to wait for confirmation? How to enter, how to manage, and also to review and backtrace and figure out, hey, how can I improve as a trader? But everything is going to start with understanding what you're doing. So remember that a market is simply a place where buyers and sellers meet. Price moves because buyers and sellers are constantly competing, and buyers push price higher, sellers push price lower. And your job as a trader is to understand what's happening in that battle. And then you can create a plan around that. As you pick up trading, as you get deeper into this understanding, you realize it takes a lot of skill. It's a lot of practice. It's a lot of repetitiveness. You have to have a process. And that's what my goal is to help you do. Right. And skills, you don't just magically get that. It's built through education, practice, repetition. So before we move forward, make sure you understand the foundation, right? Because the better you understand the basics, the easier everything else is going to become. So let's continue building your foundation. Thank you for watching this video.